Here to dive into industry trends with leading ETF experts, this is ETF Spotlight with Neena Mishra.
Hello and welcome to ETF Spotlight. I'm your host, Neena Mishra. In this episode, we are talking about technology stocks that have been on fire this year. The Nasdaq 100 index entered a new bull market up more than 20% from its December end low. And that is for the first time in 3 years. Looking at some of the individual stocks, Nvidia is up more than 90%, Tesla more than 80%, even mega cap tech stocks, Apple 30%, Microsoft about 20%. And these stocks are outperforming because investors are speculating that the Fed could stop raising rates soon. And technology giants like Apple and Microsoft also benefited from their safe haven status among the recent banking turmoil. And I have the perfect guest to talk about technology stocks. My guest is Dan Ives, Managing Director at Wedbush Securities. He's been covering the technology sector for over 2 decades and is a highly sought after tech expert. So we'll be talking about the outlook for technology stocks and also a cloud computing ETF that Dan manages. I'll then talk about some more ETFs that investors could consider if they want to invest in mega cap tech stocks using ETFs. Joining me now is Dan Ives. Dan, welcome back. Great to have you on the show.
Great to be here.
So perfect time to talk about technology. They have done so well. These stocks have done so well in the first quarter. So that's mainly because your investors are speculating that the Fed may be close to ending its rate hiking campaign. But the question now is whether this rally can continue because valuations do not look very attractive now. Earnings picture is cloudy. In fact, earnings are expected to fall this year. So tell us what you think about technology sector. Can the rally continue and why?
Look, I mean, we thought going into this year that tech stocks are going to be up 20%. And, even though we've had a very strong start to the year, I still believe there's upside in tech, 10 to 15% upside here through the rest of the year. I think the big thing that we're seeing is that numbers from a guidance perspective, the Band-Aid got ripped off. And I think we're going to have a 1Q earnings season that's going to generally might slightly exceed in some ways in terms of where the street is. And I think the setup, it's still under-earned in terms of tech. Clearly 7 or 8 stocks that have hugely outperformed, in terms of tech and that impact on NASDAQ. But I think we're setting up for what's going to be a pretty strong tech rally here.
So you mentioned the ripping of the Band-Aid, and we were talking about the cost cutting and layoffs announced by these companies just before we started recording. So I was interested in your thoughts on Apple, because Apple is the only major tech company which hasn't announced layoffs so far. So do you think we could see layoffs announcements from Apple as well? And do you think that layoff rounds by other major tech companies and other cost cutting measures, they are over for now?
Well, first of all, I don't think Apple hired to the extent that these other tech companies did. I mean, if I look at Meta, you look at Amazon, even Microsoft to some extent, and I think Cook's more tactician in terms of the way that they hired. I think around the edges, they've been cost cutting, but I don't expect you're going to see significant layoffs from Apple because they just did not hire small cities like some of these other tech companies. And I think that's the important thing. Look, Microsoft hired about 75,000 people during the pandemic. If you go from the start of the pandemic to what's over the last 6 months, and now they're laying off 10,000. So it just puts in perspective, I think, some of the ups and downs that we've seen. But that's why I believe it sets up for more leverage in the models. They navigate the storm. I still view it's a soft to no landing. And the Fed is essentially handcuffed at this point, given what we've seen with SVB, Credit Suisse, and others. Despite talking the tough talk, I think Street basically knows they're done.
Okay, so we have to talk about artificial intelligence because there has been so much buzz surrounding AI and Microsoft.
Oh, there is? I haven't heard any. Oh, there is? Okay.
So Microsoft is investing billions into open AI, and in fact, CEO Satya Nadella had said that AI is the biggest thing to happen to the company in the 9 years since he took over. And Alphabet or Google, we know they have been investing heavily in AI and machine learning over the past few years, but somehow they were more cautious and then after Microsoft's announcements, they had to scramble to roll out their chatbot, but with underwhelmed. So do you think Microsoft has won the first round in this arms race?
Look, I think in the arms race, ChatGPT, if you look at the OpenAI investment, the 10 billion, it's been a home run. I think in this Game of Thrones, significantly winning against Google and others. And I think that, I think right now, the big thing with AI is this hype. Is this just another metaverse type cycle? And I don't believe it is. I believe it's real in terms of the spending here, both on the consumer and the enterprise. We've seen the technology, and now you see a lot playing catch up. But if you look at Google in terms of that event, rushed it out, black eye coming out of the gates. Obviously, it's an all hands on deck. So really trying to ramp up Bombard, and this is going to be a multi-year battle. And that's why I look. The reality is Meta, that name change probably came too quick, right? Because they're spending more in AI than Metaverse.
And what do you think about smaller pure play AI stocks that have been on fire this year because there are not many and these are small cap companies. So investors have been piling into these stocks. Do you think the rally in those pure play stocks can continue?
Look, there's names like C3AI, as a pure play. I'd say tangential names like Palantir and a few others. Look, I think investors are trying to find how you can play these trends. I think the best way to play the trends is Microsoft and NVIDIA. In terms of ultimately, I think the best ways to play it. I do think when it comes to like C3, they have a pure play opportunity, but execution's been an issue with them. And that's why I think you could see definitely, maybe some froth get taken out. But ultimately, if we look, I think this is a real cycle. And I think there's just a handful of companies that's ultimately well positioned.
What about Apple and Amazon? We haven't seen any big AI related announcements from those companies so far. But everyone is trying to capitalize on the AI boom. So do you think we'll see some important AI related announcements, product announcements from Apple and Amazon soon?
I do. I think they've been kind of behind the scenes working, making sure they don't rush this out. I think we're going to see that from Apple, when they have WWDC, they're the developer conference in June. I think that's where we're going to see that sort of sneak peek of the AI capabilities that Cupertino's been working on.
So among big tech stocks, which one is your favorite as of now? I saw a note from you recently. You called Apple the Rock of Gibraltar stock. And as we were talking just now, Microsoft appears to be a big winner, or at least an early winner in this AI arms race. So which one is your favorite as of now?
Look, I think Apple, to me, checks every box, because I think if I look at the install base. I look at what's coming on the iPhone front. I look at demand that's holding up. I think services business has been extremely robust, and that's why it is a rock of Gibraltar. I think it's a name that also more and more you're seeing more money get squeezed out of financials into tech. Apple, huge beneficiary of that. Microsoft, huge beneficiary. And I don't feel like there's a shoe to drop in terms of earnings. Because all of our checks, I'm not saying it's, roses and champagne out there, but it's not the negative and the doomsday that was priced into these stocks, especially 3 months ago. Clearly, the risk rewards changed a bit as a lot of these stocks have moved up. But I think that's why there's a very, very important quarter for tech to kind of keep this rally going.
Great. Now let's talk about Tesla, which I know has been your favorite stock for a long time. You have liked Tesla stock, but you were concerned about Twitter drama, which you called Nightmare on Elm Street for Tesla investors and horror show because of Musk's use of Twitter as an ATM. So do you think that Musk's preoccupation with Twitter is still a concern for Tesla investors?
Look, I think a lot of that nightmare is in the rearview mirror, both from a financing perspective, and I think a lot of the noise that and look, and that was a big discount on Tesla stock. I think that started to subside, and ultimately Musk, the red cape's back on. I mean, it's starting to get more superhero status relative to what we've seen in terms of demand. And that's really the important thing for Tesla, is that the fundamental story's returned and you're starting to see, I think more investors appreciate in this EV battle for electric vehicles, just the scale and scope of what Tesla's done and the success that they've ultimately had. And that's why Tesla continues to be, along with Apple, in my opinion, the two most transformational names in the market.
Now, let's talk about other tech-related themes. I know you like cybersecurity, you like cloud computing, software. So which is the best trade in technology sector as of now? Where should investors be putting their money to work?
Well, I think I view it as pockets that are holding up. So I talk about in big tech, our favorites, disruptive tech, Tesla. I think cybersecurity and cloud are holding up very robust from a spending perspective. And those are two areas that we're very, very bullish on. Microsoft, Salesforce being our favorites. Names like Datadog, Snowflake as well. And then you look at cybersecurity, that's where names like CrowdStrike, Palo Alto has been a top name to own there. Because in this market, I still feel that, taught from an institutional perspective, underowned. I think a lot of these companies have lowered guidance to a point where we're starting to see close rates actually slightly improve. Now, it's a cloudy macro, so you're going to have volatility. I believe cloud and cybersecurity are really two of the core components that we'd want to be.
So let's talk a little bit about your ETF, the Ives ETF that you manage. Tell us about this ETF a bit.
Look, and that ETF was really collaboration ETFMG and Wedbush to really go after cloud infrastructure and that market, not just domestic, but international. Because if you look at cloud spending, we talk about Microsoft, Salesforce, and a lot of the other cloud plays. This is not a fad. I believe we're only less than halfway through the broader cloud build out. And, I think when you look at vehicles like this, it's really focused on capturing, what I view as some of the bigger opportunities out there when it comes to cloud.
Excellent stuff, Dan. Always a pleasure to have you on the show. And thanks as always for sharing your excellent insights.
Thanks for having me.
That was Dan Ives of Wedbush. If you want to invest in these mega cap tech stocks that we discussed, One of the best ETFs and one of the cheapest ETFs is the technology sector, select sector spider fund, ticker symbol XLK. And this has Microsoft, Apple, and Nvidia among its top holdings, and these three stocks account for about 50% of the portfolio currently. So you get a concentrated exposure to these stocks. Another ETF which is worth considering is the QQQ, or its cheaper version, QQQM, which is more suitable for longer term investors because of its lower expense ratio. And this is because in XLK, you will not get exposure to Tesla or to Amazon or to Google. And if you want exposure to all these big tech stocks in one ETF, then QQQM and QQQ, they are great options. So in QQQ, Microsoft, Apple, Amazon, Nvidia, Tesla, and Alphabet are the top holdings, and they account for about 52% of the portfolio currently. And then talks about cybersecurity being one of his favorite areas. So if you want to look at ETFs, ETFMG offers a cybersecurity ETF, which is the oldest in the space. The ticker symbol is IHAK. There are other ETFs which are worth considering, worth a look. This one by First Trust, CIBR, CIBR, Global X, the ticker symbol is BUG, and iShares, the ticker symbol is IHAK. In full disclosure, I own the IHAK ETF and the ETF investor portfolio that I manage. Thanks for listening. If you like our show, please leave us a rating on iTunes or wherever you get your podcast. And also make sure to subscribe so that you do not miss any episode. If you have any comments, questions, or suggestions, please email podcast@zacks.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.